I do believe we're just at the beginning of the tokenization of all assets, from real estate to equities to bonds across the board.
So, you just heard from Larry Fink, and you have to understand, when the guy running the world's largest asset manager says something is the next step for finance, it's not just an opinion, it's a signal. It's basically a roadmap for where trillions of dollars are about to go. Okay, let's really get into this.
Right there, that's not a prediction, it's a declaration. This is the leader of an institution that doesn't just play in the market, it literally shapes the market. He's calling his shot, laying out the core thesis for the future of capital, and it's coming straight from the top.
And to really wrap your head around why this matters, look at that number, $10 trillion. That's more than the GDP of nearly every single country on the planet. So when the person in charge of that much capital shares their vision, Wall Street doesn't just listen, it gets to work. It starts building the infrastructure to make that vision a reality. All right, so here's our game plan. We're going to break down exactly what this massive shift means. First, we'll dig into that $10 trillion signal. Then we'll explain what this upgrade to our financial plumbing actually looks like. We'll show you how this is already jumping from theory to the trading floor, explore this game-changing idea of a new collateral economy, and then wrap up by looking at what this next inevitable chapter of finance really holds. Okay, so let's start right there, with that signal. Huge financial shifts, they don't start with a big bang. They start quietly. They start in interviews and infrastructure projects long before most people even have a clue what's happening. Larry Fink's vision? That's the blueprint for one of those quiet revolutions that's happening right now, in plain sight.
So at its core, what are we really talking about? Well, it's a fundamental upgrade to the mechanics of global finance. It's about moving from a system built on paperwork, a dozen middlemen, and bankers' hours, to one built on programmable digital assets that are alive and working 24/7.
And the key piece of tech that makes this all possible is tokenization. Now, that sounds complex, but the idea is actually super simple. You take any real-world asset, a stock, a bond, even a building, and you represent ownership of it as a unique digital token on a blockchain. So instead of your name being in some dusty old ledger or a private database, your ownership is secured by math and code. And when you put the old way next to the new way, wow, the difference is just night and day. The old system, it sleeps at 4 p.m. and takes a day or more to actually settle a trade. The tokenized system, it's always on, and settlement happens instantly. Ownership goes from being locked in a silo to being transparent and distributed. This isn't just a small step up, it's a total paradigm shift. And you can hear it in Fink's own words. When everything's immediate, there's less risk and lower cost for everyone. When every transaction is on a transparent, unchangeable ledger, it becomes a whole lot harder for bad actors to do bad things. It's about building a system that's faster, cheaper, and way more secure. Okay, this is so crucial to understand. This isn't some far-off sci-fi future we're talking about. It is happening right now. The financial rails for this new world are being laid as we speak by the biggest names in the business. And the proof? It's already in the numbers.
Just take a look at this. This isn't some obscure crypto asset. We're talking about tokenized U.S. treasuries, the bedrock of the entire global financial system. This market is already blowing past $10 billion, and you can see that classic hockey stick growth curve. This isn't a test run anymore. This is proof that the model works, and it is scaling fast.
And here's the real kicker. Who's building all this? It's not just the crypto-native startups you'd expect. The most established, most regulated, old-guard institutions in the world, they're the ones leading the charge. I mean, case in point, the New York Stock Exchange, the NYSE. They are building a platform for 24/7 trading of tokenized securities. We're talking instant settlement using stablecoins, fractional ownership, the whole shebang. And they're roping in giants like BNY Mellon and Citigroup to make it happen. This is Wall Street integrating blockchain technology into its very core. And as Professor Campbell Harvey puts it so perfectly, this isn't a fad. This is a technology that solves real, fundamental problems in finance. Problems of speed, cost, and access that we've just put up with for decades. What's so fascinating is how we're seeing this future arrive from two different directions at once. On one hand, you have the establishment, the NYSE, building this new, regulated system right alongside the old one. And on the other hand, you have crypto-native firms like Ondo Finance who are planning to put U.S. stocks directly onto public blockchains. It's like two teams building a bridge to the same island, just from opposite shores.
Now this brings us to what is, maybe, the most profound impact of all of this. See, it's not just about trading Apple stock at 2 a.m. It's about unlocking the massive, latent value in trillions of dollars of assets that are currently just stuck, unproductive, illiquid.
$16 trillion. That's a conservative guess of the value just sitting there, locked up in things that are a pain to buy, sell, or borrow against, like private company shares or a piece of a skyscraper. Tokenization makes these assets divisible, tradable, and most importantly, usable as live productive capital.
And that right there is the key. The real revolution isn't just owning a digital receipt for your building. It's that this digital version can now be put to work for you, instantly, anytime, day or night.
There's a name for this: collateral utility. And it's a simple but powerful idea. Your assets stop being these lazy, passive entries on a spreadsheet. They become active, programmable tools that you can deploy in seconds to get things done.
Let's just walk through a quick example. Imagine an owner tokenizes their office building. Step 1. Then they deposit that token into a decentralized lending protocol. Step 2. Instantly, they receive a loan in stablecoins. Step 3. That's it. No loan officers, no underwriters, no waiting for weeks. The value that was trapped inside that brick and mortar is now liquid capital. That's the future of finance, right there.
Now, let's be realistic. This entire transition is not going to happen with the flip of a switch. The destination seems clear, but the road to get there has some pretty significant hurdles that need to be cleared.
Yeah, the to-do list is long. Getting the green light from regulators is probably the biggest one. Then you have to convince millions of investors to try something new. You have to make sure there's enough liquidity for 24/7 trading to actually work well. You have to solve tricky things like how to handle dividends on-chain. And of course, the whole system has to be rock-solid secure. These are not small problems.
But if you look at the timeline, you can see we've been here before. People laughed at BlackRock when they first started pushing bond ETFs. Now it's a multi-trillion-dollar industry. We're just seeing that same pattern play out again, but on a much, much faster timeline. From the funds launching this year to what the NYSE and Ondo have planned for 2026, the momentum is undeniable. We're heading for a hybrid world where the back end of finance lives on-chain. And that really brings us to the most important takeaway. The real edge, the smart money, isn't just chasing the latest trend. It's focused on understanding, and in some cases building, the fundamental infrastructure, the protocols, the platforms, the plumbing that is going to make this entire shift completely inevitable.
So this isn't just another market cycle. This is a foundational rebuild of the entire architecture of global finance, and it's happening right in front of us. The only question is, are you paying attention?